You ever get that feeling that when it comes to money, there's the way things work for most of us, and then there's a totally different set of rules for the super rich? Well, you're not wrong. Today, we are pulling back the curtain on a hidden financial system. It's not just built for getting wealthy, it's built for creating dynasties. All right, so let's just dive right in. For 99% of us, our financial life happens over here, in world number one. It's all about earning income from a job. But for the ultra-wealthy, the entire game is played in world number two. It's not about paychecks, it's about owning assets. Businesses, stocks, real estate, things that grow into massive fortunes all on their own. So in this explainer, we're gonna get into the nitty-gritty of that hidden playbook. We're gonna break down the exact tools they use to build and protect that wealth for generations. And I promise you, understanding how this works is gonna completely change the way you look at money. Okay, section 1, two financial worlds. Let's start with the one that's probably gonna look pretty familiar to you. Yeah, this is the path most of us are on, right? You get a job, you earn a salary, you pay income tax on that salary, you try to squirrel away some money in a 401k, and maybe buy a house. And that's not just a feeling. For the bottom 80% of households, a whopping 94% of their income comes from exactly this stuff. But here's the thing. At the very top, that's not the game at all. A paycheck is almost irrelevant. Their wealth isn't earned paycheck to paycheck. It's grown from the assets they already own. And the rulebook for protecting that growth is just completely different. And that's where this huge idea comes in: dynastic wealth. This isn't just about being rich. This is about being strategic. It's about engineering a fortune, like building a financial machine so that it can cascade down from parents to kids to grandkids and on, mostly untouched by the taxes that everyone else assumes are just a part of life. And how well does this work? Well, the results are, honestly, they're kind of mind-blowing. One report found that between 1983 and 2020, the top 5 dynastic families in the US saw their wealth multiply by 34 times. 34! And that's after adjusting for inflation. Let me tell you, that does not happen by accident. So that brings us to our next section, the wealth fortress. You're probably asking, okay, how on earth do they actually do this? Well, let's get into it. Okay, so the main tool in their toolbox is something that's basically, you guessed it, a financial fortress. It's a legal structure called a dynasty trust. You put your assets, stocks, real estate, entire companies inside this trust. And once they're in there, they're shielded, protected from future estate taxes. Those are the taxes that are normally paid when wealth gets passed down. And the way this fortress works is actually pretty straightforward when you break it down. Step 1, you put your assets inside this legal box. Step 2, inside the box they grow and make money, all protected. Step 3, your kids, grandkids, and so on get to benefit from everything inside the box. And here's the kicker, the part that really changes the game. Step 4, the box can legally last forever. And this whole debate, it's not new, not by a long shot. We're talking over 100 years ago, President Teddy Roosevelt was already talking about this, warning about what he called swollen fortunes, and saying we needed a strong inheritance tax to keep things in balance. And for a good chunk of time, we actually had one. The estate tax came along in 1916, and at its peak, the top rate was 77%. Can you imagine? But since the late 70s, it's pretty much been a steady march in the other direction. Just look at this chart. That massive peak up there, that was when the whole idea was to put a brake on these massive family fortunes being passed down forever. And the long slide down to where we are today, a 40% rate with huge exemptions, meaning you can pass millions tax-free. It just shows you how much that original idea has been taken apart. So theory is one thing, but what does this look like in real life for a real family? Let's dive into a little story here. Picture this, it's 1922. A newspaper tycoon named E.W. Scripps puts his company's stock into one of these trusts. For the next 90 years, that fortune just grows and grows, supporting generations of his family, all while shielded from estate taxes. The trust finally pays out in 2012, and not long after, reports pop up showing his great-great-grandson on social media with stacks of cash and a gold-plated rifle. That is the power of the financial fortress. All right, next up, the tax reset button. If the Dynasty Trust is a fortress, think of this next tool as a secret escape hatch, or a reset button that can wipe away decades of taxes. So this thing is officially called stepped-up basis, and it's one of the biggest, kind of wildest loopholes out there. Here's the deal. When someone passes away and leaves an asset, like stock, to their kids, the tax code basically hits a reset button. It pretends all the growth that happened over decades never happened. It wipes the slate clean for tax purposes. Okay, let's make this super clear with an example. Check out this table. Let's say your grandpa buys a stock for $10. He holds it for 50 years, and now it's worth $1,000. Awesome, right? But that's a $990 gain that he'd have to pay taxes on if he sold it. But if he passes away and leaves it to you, the reset button gets pushed. Your new cost is $1,000. So if you sell it the next day, your taxable gain is zero. Nothing. Poof, gone. Okay, so we've talked about the how. Now let's get into the so what. Section 4, the 8.4 trillion impact. And yeah, you heard that number right. Look, the scale of this is so big that it led one former top economic advisor to the president, a guy named Gary Cohn, to say something pretty shocking. He said, only morons pay state tax. Now, that's a blunt way to put it, but it kind of highlights a reality. With enough planning, these taxes have become almost optional for the super wealthy. So what's the actual price tag on all of this? The report we're looking at puts a number on it, and it's a big one. Get ready for this. $8.4 trillion. That's the amount of wealth transfer taxes that are projected to be avoided over the next couple of decades because of these loopholes. Trillion with a T. Now, a number that big is almost impossible to wrap your head around, right? So let's put it in perspective. The report points out that this 8.4 trillion is about double the entire cost of funding the expanded child tax credit over that same time period, a policy that was estimated to cut child poverty by about 40%. But according to the sources we're looking at, this whole thing goes way beyond just dollars and cents and tax revenue. They argue that when you have this much wealth concentrated in so few hands for so long, it's really about power. And there's this really famous quote attributed to a Supreme Court Justice, Louis Brandeis, that kind of sums up the core argument in the source material perfectly. He said, "We can have democracy in this country, or we can have great wealth concentrated in the hands of a few, but we can't have both." Okay, so we've gone through a lot. Fortresses, reset buttons, trillions of dollars. So what's the actionable takeaway for you? What are you supposed to do with all this information? Well, it's not some secret stock tip. The real power is in the knowledge itself. Now you can understand the news about taxes and wealth in a totally new way. You can see clear as day that the system really does have different rules. And maybe most importantly, you can see that these rules aren't just like gravity. They weren't inevitable. They're the result of specific policy choices. Which leads us right into our final section, a system by design. Because the main point the source material is trying to make is that none of this happened by accident. It's a system that was designed this way. And if a system can be designed, well, it can also be redesigned. The report lays out several proposals, like getting rid of that tax reset button or making the estate tax stronger again. So at the end of the day, what we've done here is pull back the curtain on these two completely separate financial worlds, one based on earning income and one based on preserving dynastic wealth. And the sources we've explored really leave us with one massive open question. Knowing what we know now, what should the design of our system be for the future? So now I have to turn it over to you. I'm genuinely curious. What was the one thing in all of this that made you go, whoa? Was it the financial fortress of the Dynasty Trust or that tax reset button that just erases gains? Drop a comment below and let me know. Thanks so much for digging into this with me.
Thank you for spending time with us here at the Violet Vault. Don't forget to like, subscribe, and drop your thoughts in the comments below. I'd love to hear from you. Until next time, stay focused and keep growing.